What is going on, traders? Welcome back to the Traveling Trader. In this video, I will be discussing GME, Expr, BB, basically all of the shorted stocks. If you missed your opportunity there, I'm going to be giving you an idea of how to still play this for potentially massive profits. We are already in some of these trades, but I'm going to be giving you my thinking behind them and show you how you could potentially leverage this, because this situation is not over. There is still time to make a ton of money, in my opinion, on these shorted stocks that are now experiencing a short squeeze. But before I get into it, no, I'm not going to say hit that thumbs up. I want to talk about something a little bit more serious. They just shut down Wall Street Bets, the Reddit forum that essentially found an edge and started beating the market makers and the hedge fund money managers. Now, it's Reddit's own server, so obviously they shut it down, but I have no doubt in my mind that this was influenced from a decision up top somewhere. And now they're literally saying that they're experiencing technical difficulties based on unprecedented scale because the community grew so large. This is bullshit, guys. This is exactly why I left the finance industry years ago. Now, GameStop obviously is just a symbol. It's a pawn in this game. Nobody believes that GameStop is worth $350, but that's not the point. The point is that the community is not doing anything illegal, the Wall Street Bets community. They are just grouping together and conversing on how to trade this thing the same way that these billionaires do in what's called idea dinners, which actually do exist. When a group of money managers get together and decide on the fate of a company, or sometimes even the fate of a currency. I'm so vexed right now because I remember the 2008 financial crisis. I'm that old, yes. And I have friends that lost their houses, lost their jobs back then, and not one person paid any sort of retribution for that crisis. There were these spineless, snaky money managers that were putting together mortgage-backed securities, which I don't even know why that's a thing. Basically grouping mortgages together and selling them as a derivative or a financial instrument. Even worse, they were packaging subprime mortgages, basically mortgages that are high risk, and grouping them together and labeling them as low risk and selling those off as if we needed more ways and more derivatives upon which to speculate. More importantly, and directly related to what's going on now, naked shorting was outlawed. That was a direct result from the 2008 financial crisis. So aside from the mortgage-backed security fiasco, they outlawed naked shorting in 2008, 2009 because of how detrimental the effects of naked shorting could be on the market and the economy at large. And yet these motherfuckers still were able to short GameStop more than 100%. The short float of GameStop was 140%. That means that more than 100% of the shares available were short. How are they even allowed to do that? And if these fund managers are so taken aback by what's going on now, what about the ethical implications of trying to short a corporation to the fucking ground? Putting pressure on the market to crush an already failing retailer. And then you have clowns like Andrew Left, whose whole spiel is to write these short reports and try to bring down companies. Why are they doing that? They're doing that to line their own pockets and the pockets of their clients. Now, I'm not one to shit on the parameters of capitalism and the markets. I realize what niche this YouTube channel is in. But that is the exact reason why we should be aggravated that Wall Street Bets was banned. Because they were playing within the rules. They were doing nothing illegal. They saw that idiotic fund managers like Melvin Capital and others contributed to shorting more than 100% of the stock and decided to leverage that situation in a legal manner, simply by using the concepts of supply and demand economics. What's happening with GameStop is not a glitch. These rightful shareholders of GameStop are hoarding these shares and not allowing these idiotic money managers to close out their positions for cheap. If you want to close out your position, you got to pay me top dollar. That is within the rules of the game. All is fair in love and war. These idiots and clowns running funds now want to be bailed out. So they're hoping that shutting down or putting pressure on Wall Street Bets or on Reddit to shut down Wall Street Bets, they're hoping that that will kill the momentum, because all that needs to happen really for this to end is for that momentum to die down. And once people start selling their shares, then these idiots who are short the shares of GME can start closing their positions as the stock price dies down. Now, I said it before, but of course the situation is going to end, and it's going to end when one or more of these things happen. Either the SEC or some type of governing body puts pressure on Reddit to shut down Wall Street Bets, or at least that section of the forum, which looks like it already happened. happen, or GameStop issues more shares here to try to raise money and cover some debt, or the fund managers just relent and start closing their positions at the high price of whatever the price is today, $300 to $400. So it is going to end at some point, and the plays that I show you today are going to show you how to leverage that, especially if you missed the initial run up. But I really just had to get that out of the way. So I'm sorry for the prelude, but I just really had to get that out of the way, man. This is why I hate the finance industry. This is why I left the finance industry years ago and why I went into tech. They are not playing by the fucking rules, and they think that the rules only apply to them. All right, guys, sorry about that. Woo, my blood pressure went up, but I'm okay. So the plays that I talk about today are going to be focused on when this thing is going to end and what you should do, because just as there are plays for the rally, there are going to be plays for when this thing is over, right? Like GME is not going to be trading at $300 or $400 forever. In a few months, maybe this thing is going to drop. So I'm going to show you how we played this and how to continue playing it moving forward, especially if you missed the initial run up. So what we did was I took a look at GME's chart at some point last week, and I looked at the implied volatility, and I saw that the implied volatility was still relatively low based on what the stock price was doing. So the stock price had jumped at that point to like $40 or $50, and yeah, we saw this rising implied volatility here, as you could see on this chart. Now you could pull up implied volatility in Thinkorswim. You can also look at it in TradingView. I don't think that there's a graph for implied volatility in Robinhood, although you can look at the implied volatility number in Robinhood. But I saw that the implied volatility was climbing, but it was still relatively low compared to what we saw before, like in March, right, when implied volatility spiked. Now, why is this relevant? Well, when implied volatility goes up, the option prices go up. Both the option prices of calls and puts go up. Now, the best 1-2 punch when buying single options is for the stock price to move in your favor and implied volatility moving in your favor. That is a double whammy, right? That's like an accelerator for your option. So if you bought call options, for instance, as I know a lot of you did, then you made even more money, not only because the stock price went up, but because implied volatility went up. So then I was like, okay, if I missed the boat, how else can I play this? Well, I took a look at the puts, specifically in March, right? Because I was like, okay, this thing might be over in a couple months. So I took a look at the March 19th puts, and they were trading so cheap. I was looking specifically at round numbers. So I was looking at $15, $10, and $5, and they were still really cheap. Now you could see all the green here. The puts actually went up with the stock price going up. We'll talk about that in a second. But these puts were actually so cheap because the implied volatility was still relatively low compared to what the stock price was doing. Yes, it was rising, but it wasn't super hot like it was back here in March. So I knew what the implied volatility's potential was. So I essentially came in here and I bought a bunch of the $15 puts, the $10 puts, and the $5 puts. And by the way, I sent all this out in the trade alerts, and if you want access to our trade alerts, link is in the description below. So I bought all these, and they were like pennies on the dollar. And you could see, like, for instance, the $5 put right now is up 285% today. Now, me personally, I've never seen a situation where the stock price goes up so much and the price of puts go up so much. I bought these in preparation for March. I didn't even buy them, you know, for a play in the next couple of days. But these puts have just absolutely skyrocketed because the implied volatility is now through the roof. Now, another reason that I bought puts was because I knew that these money managers weren't trying to close their positions. They were not trying to close their shorts with GME's stock price being so high. So another way that they were going to attack this was by buying puts. And I looked at the volume of puts days ago, and they haven't really spiked that much, right? Now, what is the relationship between the demand of options and implied volatility? Well, when demand of options goes up, implied volatility goes up, option prices go up. So I was like, we might actually have an edge here. Before these money managers start buying up these puts, we can buy the puts, and then when they start buying them, they can drive the price of these puts up. Now, again, I didn't expect it to happen that fast, but it did. And we made a boatload of money on the $15, $10, and $5 puts, even though the stock price is still going up. Now, these are going to print really hard when the stock price tanks. Like when all this is over and the money managers are forced to close their shorts and the stock price starts dropping, these puts are going to print really hard. So what is the play here? Well, You can obviously buy the puts now, but the implied volatility is so hot. What I would do is actually wait for implied volatility to drop a little. Just like in the way that it did back, if you look back in March, there were a few spikes. So you want to catch implied volatility on one of these spike downs and then buy puts again in preparation for March or April or whenever you think this thing is going to be over. You could just buy puts and hold them, and they will be worth multiples down the road when the stock price starts tanking. Just to give you an example, if we go back and look, let's look at the calls. If you look at what the in the money calls are priced at for GME, they're insane. Like, these in the money calls are in the $200 and above range, right? And I'm talking about, we bought these puts for pennies. We bought them for less than 40 cents. So down the road, if these start becoming in the money or closer to in the money, imagine how much money these puts will be worth. Now, you could play it safer and go out to April or even July and buy those puts. But again, I would wait. I would look at implied volatility, wait until implied volatility drops, and then buy those puts in preparation for a drop in stock price. Now, we did this on Express, on BlackBerry. Express, by the way, if you watch my last Express video, you would have bought it under $2. Anyway, the point is, we're doing it on these gamma squeezed stocks because this will eventually end and these will come tumbling down again. So I'm collecting these puts when implied volatility drops, and I'm just going to hold them. Again, if you want to be a little more risk averse, you can go out to July, April or July. Now, I would give you some more complex trades like spreads and whatnot, but these exchanges have actually banned complex options on some of these tickers. So all we can do really is buy and sell puts and calls. Anyway, guys, that is it for this video. If you guys get anything out of this video, leave it a big fat thumbs up like this. Leave it in the comment section below. Let me know if you learned anything or if you have a question. Sign up if you want access to our trading group. We have over 2,500 traders in there now talking trades all day. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.